Okay, thanks for joining me here. I think it's also worth pointing out that of all the conferences I've emceed and where I've moderated panels, I think this is the first one where I've had someone both wearing shorts and someone wearing a tie. So I think this is a first. I don't wish to pander to stereotypes, but probably no prizes for guessing which one of our panelists is from the SMB, and perhaps we'll start with Thomas to introduce himself.
Correct, yes, thanks. So my name is Thomas Moser. I'm an alternate member of the governing board at the Swiss National Bank. And the Swiss National Bank is not a commercial bank, it's the central bank of Switzerland. And I guess the term central says it all for an audience like this. So we are the ones who have a monopoly on producing not money, not the money that is used, but on the legal tender. And more importantly, we also make the monetary policy, we set interest rates, and we are responsible for price stability in Switzerland in terms of a consumer basket.
Mark?
My name is Mark Hollitscher. I'm the CTO of Microsoft Switzerland and a member of the executive management team there. I spend most of my time working with regulated entities, which means banks, insurers, but also entities in the public sector space, when they consider to onboard the cloud and actually move applications to the cloud.
Mona.
My name is Mona Elisa. I'm the co-founder and CEO of Melonport. We are a Swiss-based, actually Zug-based startup. We founded 2 years ago, and we're building a decentralized asset management tool, which allows you to set up, operate, and manage a fund on the blockchain. Yeah, that's it.
Okay, and Luis?
Cool. I'm Luis. I'm the co-founder of Aragon and also the CEO of Aragon One, which is one of the teams working on the Aragon project. And the Aragon project wants to disintermediate the creation of any organizational structure. So you can basically create decentralized autonomous organizations on a blockchain like Ethereum very easily and create apps or third-party modules that enhance the functionality that it has.
Nicola?
My name is Nikola Stoyanov. I'm the one with the unfortunate picture, apparently. I am the CBDO of Eternity, which is a scalable smart contract infrastructure, and the CEO of Eternity Ventures, which is mainly focusing on building ecosystems and incubating and accelerating new projects.
Okay. And David?
I'm David Waxman, and I'm the CEO of Waxman, which is the largest professional services firm focusing only on blockchain companies, especially focusing on public relations.
Okay, great. So now we know who everyone is. The panel discussion is on the future of the token economy, but I think it's probably worthwhile getting a sense of where the present is on the token economy right now. Perhaps we can couch this in, I don't know, geological terms or internet terms. I don't know who want to pick this one up first. Where is the token economy right now?
Crashing a little bit. You know, I think, like, in all seriousness, I think it's maturing a little bit. Like, we are seeing how a lot of the scams are coming down, and like people are thinking about token engineering and thinking about token science, and how do we create tokens that actually make sense and not just like a token for an ICO and like, you know, an useless thing that you need to buy in order to buy something or whatever, but actually creating something that has long-term lasting value. And I think that's super, super cool to see token engineering being something people are thinking while writing white papers.
So in internet terms, are we kind of 96, 98 or something like that?
I mean, I was born in 95, so I don't really know. Probably.
Oh, I feel really old. Okay. Thanks. Nicola.
That was a good one. I would actually agree with what Louis said. I think it's early, and a lot of people still have mostly no idea about token economics. A great example is we launched last week our first cohort of the incubator, and we had like 17 projects that were involved in it, and everybody was absolutely sure that they know what kind of token economics, what kind of models they want to use in order to generate their token at a later stage. We brought in a great mind who only works with token economics and the game theory that revolves around it. After one day, each project realized that they had absolutely no idea what was happening. And each project had to exchange their entire mechanism because you think that you can use each token, like 1,000 token equal, for example, 1 Ether or something, but the entire mechanism that is involved in this part, what you're going to use later when it comes to adoption, how many people are going to use it and so on, not a lot of people are factoring that in, unfortunately, at all yet.
Yeah, I would agree. I think what's really exciting now is that you're starting to see a lot of the projects that did their token sales or issuances a couple of years ago or a year or two ago in the first wave, really starting to now come close to the mainnet or have launch to the mainnet and really having to kind of put their use cases for the token into the ecosystem, which for the first time gives us tokens that don't just represent a theoretical utility, but actually a practical utility. And I think reading more about the work being done around governance on some of those projects and seeing the first use cases of those tokens is going to be very interesting to see what it does to the kind of whole token system.
Yeah, I mean, I think that we saw this huge run-up in December and January. And it was because a lot of people were finally realizing that blockchain technology was real, that the future was going to be defined by the use of this. And the problem was that there weren't that many places to put your money. And so you saw all of these tokens that didn't necessarily have any utility at all that suddenly were raising 30% a day. And that captured a lot of attention, and it became the zeitgeist of the industry to simply say, well, what's next? What's the next coin that's going to go crazy? I'm glad we're past that. I think we're now at a phase where, to your point, people are focusing on product. And we do have enough products or projects that did a raise before or didn't need to do a raise at all. For instance, Steemit and Dash. Those projects never had to do a token sale. But today they have very substantial engineering teams, and they spend a lot of time actually building product, and they've shipped it. That's the type of thing I think we're going to see a lot more of. Once we see it more like of an omnipresence of actually built out token systems, I think we're going to see better correlation to pricing, because right now it's very hard to price these networks. And when you think about it, when you're buying a utility token, so it's not a security token, it's not buying, say, equity, you're buying a slice of a network. What you're not buying is the performance of any underlying company. And that's a really fundamental concept that token economists talk about all the time, but the general public may not be aware of.
So I think that the pattern that I see in the discussion as it happens today is very similar to previous waves of technology. When we started to talk about cloud computing in 2010, nobody really understood what it was all about. And what I realized is that it's absolutely crucial to do a good translation of what's technically possible into the demands and the specific scenarios that are relevant for the customers. And I think we need to invest there to really translate into the language of the audience that you want to address. This can be customers, but it can also be regulators, because the knowledge difference is quite impressive.
And Thomas, do you think things have maybe been held back a bit because
I mean,
they're not
I'm even
necessarily talking the same language as the regulators, as consumers, that it's just too complex?
It's, my take on that. I'm older than you, even older than you. So actually, token economy used to have a very specific meaning in the 70s and the 60s, which is totally different from what it is now. But I think my observation is, if you look at the internet or even other technical innovations, what happens in the beginning, there's a huge hype, and I think this is clearly what we have gone through. There's a lot of stuff that will never fly, but I think there will be a long-term impact, no doubt about that. And I think what it really needs is to figure out people what they can do with these new tools. In the beginning, you have these new tools, everyone is excited. You try to do the same things that are done with the old tools, and that's usually not really the breakthrough. I mean, an example is the music industry. If you remember the CDs coming out, that was the first digital wave, and I mean, a CD is a ridiculous invention. Your sister could scratch the CD less easily than the vinyl, and it used less storage space, but it didn't really happen until streaming came along, and then there was a total change. And I think something similar has to happen here with tokens. The entrepreneurs have to find out what they can really do with that is not similar to the old products.
So is it kind of about tech? Is it about explaining the technology? Is it about gaining the trust? Is it getting regulators to kind of understand what you guys are doing for this to kind of really come into its own and perhaps fulfill some of its potential?
Yeah, but it all leads back also to this part which Mark mentioned earlier, which is this educational part, because this technology per se is not something easily understandable. I mean, it's a distributed ledger, congratulations, but there's so much more behind this thing, and you can dive so much deeper that we need to do also a lot more from our side to bring this technology, to make it more understandable, to share this knowledge, and to also make it more easily digestible for, let's say, the masses, if I can phrase that like this. And I mean, you have Academy, you have Soft Uni, you have Decade, and other projects who are working towards this, but combining this information, making it accessible to everybody, and combining it also with something like a task force or special advisory boards or whatever you want to call it that work together with the governmental bodies then and also bring that closer to them, this is going to be something that I would really like to see actually.
And is this, when do you see this happening? When is this gonna, how long is it gonna take?
It's happening already. I mean, it's just I think it's just a slow path there. But yeah, like I said, you're starting to see the first wave of projects, coming out with the use cases, and there'll just be more and more to come, and there will be others that never come with the use case. But the token economy goes much further than just the utility tokens. There's also the security tokens, there's also the payment tokens. And so far the focus has all been on utility, but I think also the next wave of tokens will be securitizations of equities, fixed income, maybe currencies. Like, I would be curious as a panelist who's privileged to be sitting here with one of the central bankers, how far are we out from a Swiss franc coin, and what are the challenges?
There's a saying.
Should we let Thomas answer that one and then come back to you, Mark?
Okay, good.
Thomas?
No, I mean, I think it has been mentioned in the last panel. Eventually, I wouldn't be surprised if there is an e-franc. I don't think we are very close. The problem is, as the story from the Bank of England and actually other central banks are quite far in terms of technology. The problem is not really the technology. The problem is what it implies for the financial sector, what it implies for financial stability, what it implies for monetary policy. So these things have to be figured out first before you can start to experiment. And I'm not really sure whether for this audience it would really be such a great thing, an e-franc. Because if you look at the history again, see, I'm an old guy, I like to talk about history. So if you look at the history of money, all the innovations always came from the private sector. And once they became really big enough to get become a nuisance to the state, then the state nationalized it. And that happened with paper money. It was the commercial banks that issued paper money, and at one point the states nationalized it. So that would basically be a nationalizing of the cryptocurrency, and I'm not sure whether that's what you are looking for. But I wouldn't be surprised if that happens in the end.
Mark?
Yeah, I just wanted to say that, at the end of the day, it's all about trust, and trust comes by foot and leaves by horse. So be careful how you build it and how you treat it. And I think the wonderful thing now is that there is this opportunity to really build trust into the infrastructure that governs how exchanges happen in the marketplace. And that's something that we really didn't have before. And obviously, this kind of, I think we are really looking at a paradigm shift, and that just needs time.
And for that trust to come about, is it going to happen organically, or do we need regulators to kind of give a seal of approval to help with this trust? Would you welcome regulation if it was the right sort of regulation, Luis?
I think something that I'm seeing here, because we moved the project to Zug, and I'm also living here, I think something that I'm seeing more and more, talking to people both in the government and also the National Bank and stuff like that, is they are very open to understand the implications of this technology and not just regulate it. Because we're seeing countries like the US, which are like, oh no, this ICO thing, by this crypto thing, whatever. And I think that's not the way you do this kind of stuff, because this is revolutionary. This may be the most important revolution since the agricultural revolution, centuries ago. So you just cannot censor it away. You have to understand it, and then you have to produce regulation if there is any regulation required, because that's a question, right? Maybe you just need to educate people. And I think that's the case here. You just need to educate people to know what's wrong, what's right, and then give them freedom to do whatever they want. Obviously, some minimum of security is cool, but I think in this new space, the crypto space, the things that you can do that can hurt you are very minimal. You cannot get someone at your house to kidnap you or something, because it's totally pseudonymous. They can just know your address and they can send you, I don't know, some city token that you don't want. That's the most harm that they can do to you. So I think the kind of regulation that we need is very, very minimal, or maybe no regulation at all, and just education. And I think the government can help educate citizens about, what this technology does.
David, you would agree with that?
Well, I think that for us to really educate people, I think there's a lot of different constituencies. And we talk about the masses, we talk about government. Those are just two of the constituencies. I think the best way to illustrate anything is with a real use case. It's just much easier to understand something if you can draw a parallel to something that you can touch, feel, understand. And I don't think we have enough use cases yet. Some of the projects are coming along. Some of them have actually built something really remarkable. But what I want to see is more enterprises, more companies, revenue-generating companies, build businesses where blockchain is integral, but might not be what you see. And I think that's going to make people trust this. Because you talk about trust. Trust is when you don't need to trust something. That is to say, it's not actively on your mind. You don't need to trust and think all the time that oxygen is in the air because you're breathing. I think that we need to see the blockchain simply useful all the time on a system that you use every day. And when that happens, it's going to be much easier to go and approach a government and say, listen, we think this is something that could be useful to you. And honestly, I've got to tell you, it's so refreshing to hear that a national banker like yourself believes that the private sector should be the ones doing the innovation and that you think the responsibility should be for us to go and come to you. I think that's fantastic.
And given this trust that's needed, and we've touched upon this already, I mean, when do we think, Mona's talked about how, there are projects already in place, this is already happening, perhaps on a smaller scale, but when is this to every person, whether they understand blockchain or whether they don't, when is this going to be kind of an integral part of their lives, that whether they're transacting or whether they're going online or whether they're riding the bus or what have you, when is blockchain going to become kind of like a central part of their lives in everyday activities for people? In the future, of course.
Yeah.
I think for some people, it already is. If you look at Venezuela or Argentina, I was just in Argentina a month ago, and I went to exchange some euro for pesos, and at a random store in the street, and they had a Bitcoin sign, and you could exchange Bitcoin, because the peso is crashing constantly, so they need to have some store of value that works. And what works? Bitcoin. Yeah. At least works better than pesos. So I think it's already starting to happen organically, and we'll see more and more. Obviously, places like Switzerland, it may arrive later, just because it's a very, very, very first world country. But places where they really, really need it right now, like Argentina, Venezuela, it's already happening.
Well, I'm glad you brought up that point. We heard earlier that there's no volatility in Bitcoin because one Bitcoin is worth one Bitcoin. But when you're talking about Venezuela, obviously Venezuela has its own particular reasons for why its currency is crashing, thanks to President Maduro. But anyway, but in terms of developing markets, and we've seen, for example, with phones, they kind of never really, go to parts of Africa. There were no landlines really for everyone. They just went straight to mobile. Are we going to see this kind of thing happening in emerging markets, in less in poorer countries, that they'll skip the kind of credit card or what have you, payment mechanisms, and they'll just go straight to digital currencies?
I mean, absolutely, because we've talked a lot. A large theme here has been trust, and in those countries where there is a lack of trust, it's the obvious first, use case and adoption to have a system that works, that you don't have to worry that somebody is going to land grab your assets from you or take away or devalue your currency 30, 40, 50% every day. And actually, to an anecdote to Luis's point, well before I started this project on Melonport, I was trying to take a year off, which never materialized. And I thought it would be fun to try and take a month off and go traveling and only spend Bitcoin for a month. And it's very interesting, if you look at the countries where you could actually survive for a month on Bitcoin, it's all the countries which lack trust. So it's actually not a new thing that Venezuela has been using Bitcoin. It's actually been around for years that they have been relying on such a currency because they don't have trust in their economy. They wake up every day not knowing whether they're going to be able to afford the bar of soap or some olive oil. So,
if there's even any in the supermarket. Did you survive for that month? Where did you go? Where were the countries?
No, the year off never materialized.
The month?
Melonport happened anyway.
So you didn't even do a month just spending Bitcoin. Okay, maybe that's a project.
That's just an idea.
Thomas.
I think, I mean, Luis and Mona made the right point. I think people switch to something if it works better than the existing or the old, or if it works okay but it's cheaper. These are the two ways when people switch, and that very much depends on how well a specific country, for instance, handles their own currency, and I think that's exactly what we see. I wouldn't put too much emphasis on the importance of teaching the broad audience about how it works. I mean, this would just be my take. I drive my car almost every day. I have no clue how it works. I trust the car. And the trust comes, that's something you give in advance anyway. And as long as it works, I trust it. That's kind of a self-enforcing circle. Once it breaks down, maybe I start studying how it works. And I think there are a lot of people who use Bitcoin without understanding how it works. But as long as it works, they use it.
But of course, one of the reasons you trust your car is that the company you bought it from is certified that the car is roadworthy. The person that services your car probably has a certificate saying that they are authorized to service that car. So that would seem to suggest that, all we need is a bit more regulation to get this trust in place, and then we'll all start using it more, and it will become kind of like a halo effect, and it will start becoming more integral to everybody's lives.
There might be a factor, but if something that's not regulated works, it might even then take over.
Yeah, and I think it's important to not conflate two different things. His specific car versus cars in general, the concept. The reason you trust cars in general is because cars have been working for more than 100 years. And so you know that the concept of cars work. Whether his specific model and make is a different story. We still have to go and fight the battle of, is blockchain real? Is blockchain something that we can trust at all? Or is it an enterprise just for criminals? This is something that we're still fighting now, and I think that when we do have some of these use cases, and yes, cryptocurrency and payments is certainly one. It's what Bitcoin was initially intended for, and so it might be the ultimate low-hanging fruit. But there's an enormous set of applications for blockchain. I mean, you've seen it with supply chain. Some of the stuff Microsoft is working on is truly remarkable. And again, and even tokens. Tokens can be used in a million different ways. I think that we need to see them being used a lot. They need to be baked into applications, they need to be baked into companies, and when that exists, we're going to have a different level of trust.
I fully agree. So we are working a lot to promote blockchain into the enterprise and establish it as a new data layer for multi-party workflows and across different business models. That can be supply chain management, that can be some kind of customer loyalty program, but it has really to, somehow. You don't realize that you use it, and then I think then we have achieved what we are actually striving for.
I was at a crypto event in Tel Aviv a few months ago, and the speaker was saying that adding cryptocurrency to your portfolio is actually a way of de-risking it because it's not correlated with other assets. So, when stocks or bonds start falling or something, crypto will not necessarily follow suit. Is that something that our panelists would agree on, Mona?
I think it used to be the case more than it is today, because the problem is now that you start to hear stories of people taking leverages and loans and mortgaging their house to buy Bitcoin, and that actually links it more to the real economy and to other asset classes. Because if you ever get another crash in some, for example, if you get another 2008 situation, then you get the margin calls, and then people are forced to sell all their assets in order to make those margin calls, including crypto. So I think that was much more true a couple of years ago. I still think it's less correlated to most asset classes and everything else, but I think a bit less so than it used to be.
Right.
Yeah, I think if you look at, for example, pension schemes, like I was working in Spain, and the Spanish government is a joke. And so basically they have built this pension scheme, which is like an inverted Ponzi scheme. And people are not being born today as 40 years ago, so that, the Ponzi scheme is going to crash. And then what's better to store your assets? Well, maybe crypto, because you store them. You don't have to depend on them crashing or not crashing, right? You just can withdraw your assets. They are yours. So I think it makes a lot of sense for people that, are depending on use a government that is not working for their pension, for example.
I find it interesting that, we saw the comments from the Bank for International Settlements talking about Bitcoin being a Ponzi scheme, and he's obviously an older gentleman versus the average age here, and certainly yourself, and yet we have young people who are kind of involved in this, referring to pension schemes as Ponzi schemes as well. So it's interesting how kind of people see things through different in different ways. We've obviously had a lot of ICOs, there's a lot of flurry and some would say hype attached to a lot of these things. Has the era of the ICO kind of peaked? Are we now going to kind of see things being a little bit calmer, a little bit less frenzied, if you like, when companies come about, or they'll find other ways to raise funds? Nicola?
It's quite interesting. There's still single projects that actually end up for 2 days closing 20 plus million. So a company in Liechtenstein actually did that the other day. But as the amount of projects, and let's call them scams, actually is progressing and increasing, being able to actually peak out and to make it, to differentiate yourself to this mass market of token sales, token generation events, contribution campaign, and so on, makes it way harder to actually concentrate the community now on your project. When we did our contribution campaign last year, it was only a couple of projects. I mean, Aragon was one of them, Bancor, and it was maybe 10, if like in a good world scenario. But we were also quite lucky back then, because obviously we kind of took the wave with everything. If I would have to go ahead and do something right now, I would have to change the entire mechanism that I used last time in order to be able to adapt and to actually succeed in creating a good project now. The next thing that I see right now is that you do not have by far enough developers that can build the stuff which is being ICO'd or token sold right now. There is not enough talent right now which is on a level that in any case will be able to realize those products, which also creates the issue of actually creating value when it comes to product level. And this is a huge issue that we also need to look around and that we also need to take into account. But the main problem that I have right now is the following. You have projects that are shipping products right now. You can use their token, their asset, whatever you want to call it, in order to be part of this product. But somehow nobody does it. We're seeing this, going back to token economics actually, you're seeing this phenomenon where the speculative value or the speculative idea is kind of taking over in terms of being cautious or being frightened for people to hold and wait until we see something like last year again, rather than actually use and incentivize the entire platform to work.
Yeah, but that's another challenge that all of us kind of applications that are coming to mainnet face. You know, we've been very production focused or development heavy focused for the last couple of years, and we haven't maybe been that focused on the ease of usability and the user friendliness as much in order to kind of ship as fast as possible. So, but I think that's natural that comes next. I mean, there's a lot of issues when you have, I mean, there's different token frictions. If you have to use 2 or 3 tokens, if your project is on Ethereum and you have 2 or 3 tokens to interact with one project, that needs to get resolved. We've been doing some really interesting thinking and work around that. You have to think about, you know, the slowness, like downloading a node to create a Melon fund, for example, is now taking 2 or 3 days to download. That's another barrier. We would like to make that easier for users. So these things, you know, will come with time, which also makes me think we're still quite early in the kind of curve. But I think that's all coming with time. It's just also a user friendliness experience as well.
Thomas, are you kind of reassured that things aren't as frenzied in terms of ICOs, and that they're perhaps just by virtue of the lack of developers that perhaps things will progress at a slightly more moderate pace?
I think what's happening is that some of the ICOs, which were not really innovation but more regulatory arbitrage, are kind of sorted out. And in that sense, I think ICOs will go on, but the real innovative projects will now be a larger part of that.
Yeah, I mean, I haven't seen the type of dramatic slowdown that maybe some others seem to have. I mean, last month we had 250 inbound requests for service, and you know, the vast majority of them weren't all that good. But I've got to tell you, there's a lot of incredible things out there. There's a lot of innovation happening. And to your earlier point, I think that the token economics really does need to be right. So things like SweetBridge, which use a discount token, it's much more valuable to people actually using the token than it would be to any speculators. And I think systems like that might become more and more popular for utility token schemes.
Absolutely. And also, you don't need developers to raise funds for a token sale, actually. That's just getting back to that.
Then they are just pure securities, aren't they, at that point, according to the SEC?
Yeah, sorry?
But then they would just be securities if the project's not if there aren't developers who actually build
Relatively,
No,
there's enough frameworks and examples where you. Sorry, Mona, please. That there's enough frameworks and ideas where, in order to actually create something like a utility token, there's enough information out there, but somebody still needs to build that stuff. You know, like.
Okay, well, we've got about 20 seconds left, so perhaps just in one or two words, just future. We're talking about the future of the token economy, so we don't expect things to change dramatically between now and next year, but when do we think things are going to arrive? Give me a 5-year, 10-year horizon. How many years hence before the token economy is kind of mainstream?
I think in 5 years' time,
Okay,
every company is a blockchain company.
Nicola?
That's pretty good, actually. I'll second that. I'll second
Luis?
that.
I agree, and I think 3.5 years.
Oh, 3.5. Do I hear lower?
No, I think I'm also in the 5 camp.
Mark?
I would say 2 to 3 years. Everything is there. We need to make it more accessible, both from a developer but also from a customer perspective.
You heard that from
Thank you
Microsoft,
very
guys.
much.
That's pretty cool.
Thomas, you're going to go lower than 2?
Yeah, I think I think it will take longer and it will look different than what we can imagine nowadays. I mean, the past also showed in the beginning you overestimate the impact that new technology has. Over the long run, you usually underestimate it, but it looks very different from what you had imagined in the beginning.
Okay, well, look, thanks, guys, for a really interesting discussion. I'd like to thank our panelists. Thomas Moser from the Swiss National Bank, Mona Elisa from Melonport, Nicola Bojanov from Eternity, Mark Hollister from Microsoft, David Waxman from Waxman PR, and Luis Quende from Aragon. Thanks very much, guys.
Absolutely.
I have to stay on stage, so I have to kick you off stage quickly.